All right, let's get some market reaction. We had been talking about the effects of this Brexit vote, the pound sterling falling to nearly 31-year lows. Joining me now from London is Craig Erlam. He's a senior market analyst. Craig, thank you very much for joining us. Good to have you on. Very strong reaction against the pound, and stocks looking like they'll be taking a big hit. What do you expect today?
I think it's going to be a very volatile session. I think we've already seen the majority of the declines which we're actually going to see in the pound. We've had enormous declines. I think this is the biggest intraday move that we've had in the pound ever, which goes some way to showing just how big a session it's already been, and it's only 5 o'clock in the morning. So I think we could still have further turbulence and further volatility throughout the session. We've still got European traders, US traders to react to this news. I think the bulk of the moves now may come in equity markets. The FTSE futures pointing down around 7%. So like I say, we've seen some massive declines already so far in the early hours of this morning, and I think there could be more turbulence to come.
Okay, so volatility expected throughout the day. What about the longer-term consequences on the market of this vote?
Well, the problem that we've now got is this just prolongs this period of uncertainty. No one knows what the UK's relationship is going to be with the EU going forward, and no one knows what the future of the EU is now going to look like. As you've just highlighted on your programme, there now calls for referendums in Holland. There could be referendums elsewhere called for as well. We know that the anti-EU sentiment is rising. Places like Spain, we're seeing similar actions, France, even in Germany as well. So I think we're going to see a lot more calls now for referendums in these countries. And now the EU really has to look at the UK and decide, what does it favour more? Does it want us to give us a good trade deal and risk more countries leaving, or does it have to give us harsh terms and sacrifice in terms of trade and therefore income?
Mm-hmm. Okay, now you talked about the volatility that you're expecting in the markets today. Could we see mechanisms put in place by the London Stock Exchange or the Bank of England?
I think the Bank of England could intervene in the markets in order to stabilise the pound, but I guess it's a case of how willing are they going to be to do so, and what exactly is it that they're going to do. So far, we've seen no evidence of any intervention from the Bank of England. It looks like they're taking a more considered approach. The other thing then is, are they going to intervene directly through currency manipulation, which would be frowned upon elsewhere, or would it require rate hikes, which could further damage the UK economy? Like I say, so much uncertainty right now around the UK as a result of this vote, and I think this is going to make some very interesting and turbulent times for the markets.
All right, Craig Erlam, a senior market analyst from Oanda. We thank you very much for that analysis.